You're watching Silver News Daily. Subscribe for more.
I think the West is starting to lose price control, and I think that's a problem that's going to get worse for them. What we're seeing, with the flow of gold into the COMEX, et cetera, is people are now starting to figure out, sophisticated buyers, sovereign wealth funds, family offices, central banks, hey, we got to get a hold of our gold, because otherwise, we're not sure if it's really there. And especially given that, you've had really over 3 years of these Eastern Hemisphere entities that have been taking delivery of their gold and then taking possession of it. And that's, it's a war of erosion on the LBMA. And so again, I think what we're seeing, with the flow of gold into the COMEX, et cetera, is people are now starting to figure out, sophisticated buyers, sovereign wealth funds, family offices, central banks, hey, we got to get a hold of our gold, because otherwise, we're not sure if it's really there. And in fact, I just saw last week, it was reported that Germany's once again thinking about repatriating the rest of its gold that's held by the Fed. I'm optimistic that I can make it to my grave without feeling the pain that's going to be associated with when everything starts to collapse for real, and Fed money printing and central bank money printing can't kick that can down the road. And I think for China, it's not as big a problem, even though they've got a lot of debt outstanding, their currency is weak, blah, blah, blah. But they also have a huge amount of gold, a much bigger amount of gold than they publicly acknowledge. And to me, that's always been their trump card in their hedge.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active. The entire silver pricing system is cracking, and the mainstream hasn't caught on yet. For decades, the paper silver market has created the illusion of abundance, flooding the world with promises of metal that never had to be delivered. But now, that illusion is collapsing in real time. The LBMA is stalling, COMEX inventories are evaporating, and delays in delivery are no longer isolated glitches. They're flashing warning signs of a system on the brink. Investors are waking up, and they're panicking. Not into tech stocks or treasury bonds, but into cold, physical silver. The shift is violent, it's global, and it's happening faster than anyone expected. And here's what's being whispered behind closed doors. Central banks, yes, the very institutions that once scoffed at silver, are now quietly buying. They know what's coming. The gold-to-silver ratio is crashing, a historic signal that silver is about to launch. And while the media stays silent, the fuse is burning fast. This isn't just another market move. This is the prelude to a full-blown financial rupture, and $50 silver is just the start. So what's really happening behind the scenes? Why are the institutions that created the paper silver system now scrambling for physical metal? Stay with me, because once you understand the scale of this shift, you'll never look at silver the same way again.
So I was working as a junk bond trader in the 1990s on Wall Street, and had decided, I got tired of New York City. There's a love-hate relationship that you have with New York City, and the hate started to outweigh the love. And I was like, you know what? I'm going back to God's country in Colorado, which is where I'm from. And for about, I don't know, at least at the end of the tech bubble, I started shorting tech stocks. That would have been, 1999, because that's when I transitioned out of Wall Street. And I was in a trading chat room with a guy, and this was in like mid 2000, and he was urging me to take a look at gold and silver and mining stocks. And I'm like, no, that's not really my thing. I'm doing well shorting tech stocks. And we became friendly, and eventually he convinced me to start taking a look, and that was in the spring of 2001. And I was like, this actually looks like a pretty good value proposition. And then I just started immersing myself in everything that you could read. Back then, James Dines had a newsletter. I subscribed to that. He was able to get a hold of free copies of Jim Willie's newsletter, which, I kind of figured out right away was, if you, reduce it to about 30% of it, that's where the truth is and what he has to say. And there was, a handful of other newsletters that I subscribed to. I immersed myself in all the, everything that you could read about, which inevitably takes you over to the dark side, right? Oh geez, look what,
For years, the paper
what's really
silver
going
market
on
has
behind the
operated
scenes
on
in
a
the
simple
system,
premise:
with
leverage.
the money printing,
For every ounce of physical
increase in
silver in
federal
vaults,
debt,
there are hundreds of claims stacked on
accounting
top of it.
fraud in
These
corporate
paper
America.
contracts have
I mean,
allowed banks and
Enron was
institutional
I was short
traders
on.
to suppress silver's true price by simply creating supply out of thin air. But here's the catch: that only works as long as no one actually asks for the silver. Once people start demanding delivery, the whole game changes. And that's exactly what's happening right now. Recent delays in physical silver deliveries at the LBMA and the COMEX aren't just logistical hiccups, they're signs of a deeper breakdown. Large-scale buyers, family offices, sovereign wealth funds, even central banks, are no longer content with promises. They want the metal in hand. And when they ask for it, the system stutters. The delays, the tight inventory reports, the quiet rule changes at the exchanges, these are all desperate attempts to buy time in a market that's out of options. This is where the illusion starts to fall apart. When the market realizes that there's far less real silver than advertised, the scramble begins. It's a textbook setup for a short squeeze, and the signs are everywhere. The futures market is flashing stress signals, backwardation is creeping in, and premiums on physical coins are widening week by week. What we're watching is the early phase of a paper market collapse, an unwind so big it could set off a chain reaction across global commodities. But this is just the beginning, because as trust in the paper system evaporates, investors are making a hard pivot, and the direction they're heading will redefine silver's role in the financial system.
Enron when it blew up. And my buddy and I were short Kodak when it blew up, because we're looking at this thing. And it's like, this thing's just, it's a viper's nest of debt, and there's probably off balance sheet derivatives that it has exposure to. So, and so I basically jumped in head first, and ever since then, I haven't looked back. And I mean, to be honest, it is as powerful as the fundamentals that. So I look at it as the secular rally in the precious metals started in 2001, right? Bottomed out in 2000, and the secular, meaning long-term bull market in the metals, started in 2001, and then we've had obviously bull cycles and a couple bear cycles in there. So, but as I started really analyzing the fundamentals and analyzing, and understanding junk bond credit as a trader, that really helped me understand, what was going on, corporate America's balance sheet, the government's balance sheet, et cetera. And I was like, the housing bubble is blowing up. A housing bubble is being blown. A credit market bubble is being blown. Stocks started, a stock bubble started blowing, inflating. And I was like, this thing's going to crash at some point. And then we had 2008. And I thought that was going to be where we'd have some type of monetary system reset. And obviously, I didn't expect the Fed to print as much money as it did. And that's what kicked the can down the road. So, I mean, fast forward to now, I mean, the same fundamental backdrop that you had in the early 2000s and that you had leading up to 2020, because that was essentially, basically, a financial systemic collapse that the Fed saved again with money printing. And now it's even worse. I mean, in my mind, what we're looking at here potentially is what happened in 2008 times 5, maybe 10. And so, in my view, the fundamentals that justify significantly higher prices in gold and silver, and obviously the mining stocks will follow that, are even stronger now than they were when I jumped into the sector.
Silver is no longer just a speculative asset, it's becoming a lifeboat. As the paper market falters, investors are stampeding toward the one thing they know can't be manipulated with a keystroke: physical metal. It's a shift that's happening at every level. High net worth individuals are demanding allocated storage. Family offices are setting up vault arrangements. Sovereign wealth funds are quietly accumulating. And everyday investors? They're wiping out dealer inventories, stacking bars and coins at a pace that dealers haven't seen since 2020, and in some cases, ever. But here's what's even more revealing. This isn't just about fear. It's about control. The sophisticated money knows that if you don't hold it, you don't own it. They've seen enough. Enough headlines, enough digital promises, enough bailouts. And now, they're moving into assets that exist outside of the financial system, silver being at the top of that list. And the result? A widening gap between the spot price of silver and the actual cost to acquire it. Premiums are exploding. In some cases, you're paying 30% above the official price just to get physical delivery. Why? Because the market no longer believes the spot price reflects reality. The disconnect between paper and physical silver is now too wide to ignore, and it's only growing. This is how every financial reset begins. Quiet at first, only visible to those paying close attention. But once the panic sets in, once the crowd realizes the door is too small for everyone to fit through, the rush becomes uncontrollable. And with each ounce pulled from the system, we move closer to a moment that could redefine the very nature of silver as an asset. And this moment, it's already in motion.
I mean, for the last couple years, I know that like private equity funds, there's a setting on private equity funds that have started investing in mining stocks. They're buying new issues, and I get this color from all the companies that I talk to, that the juniors that have to raise capital, and they're slowly trickling in some non-core. When I say non-core, guys like you and I who have just stuck through the thick and thin. There's some newer funds that are starting to participate in the sector. But what I think it's going to really take, and we saw this a little bit when the market fell off a cliff 2 weeks ago, or a week and a half ago, whatever it was, and the mining stocks and gold and silver kept going higher. I think what's going to have to happen is you're probably going to have essentially the tech bubble is going to have to really pop, and it's started to pop, but all of a sudden, clearly there's still enough money on the sidelines to keep it going. I know that I think it was 2 Thursdays ago when the market was falling off a cliff, and retail investors threw $4.8 billion just that day into the stock market. It was either a record one-day high or the second highest all-time high day for retail money going in. And so that tells me that people, and it's probably the same with mutual funds, are buying the dip if they've got cash to do it. And at some point they're going to run out of cash, and the market's going to crash for real. And stocks like Nvidia I actually think Nvidia ultimately, for a lot of reasons, not just the fact that it's insanely overvalued and the industry, is starting to face headwinds with overcapacity in data centers. I think Nvidia is going to get cut at least in half. But when that happens, I think you'll see the broader investing public, general mutual funds and things like that. They're going to sell dump tech. They're going to say, well, what do we do now? And they'll look around and they'll see what a value proposition mining stocks are. Because as you pointed out, they're lagging gold and silver. If you just measure it by, the GDX to the price of gold ratio, it's lagging badly. And if you look at it in terms of I use the ARCA Gold Bug Index, the Huey, used to be called the Amex Gold Bug Index, because GDX wasn't around until 2006. But you can take the Huey all the way, well, you can take it back further, but I take it back to 2000, and you run the ratio of the Huey to the S&P 500. And that ratio mining stocks were more undervalued relative to the S&P back then, but not by much. And just, I think maybe just a couple years ago, they might have been undervalued versus the stock market by just a little bit. But we're among the most undervalued relative to the general stock market as we've been in the entire secular bull market.
The gold to silver ratio is sounding the alarm, and history says we better listen. Right now, we're witnessing one of the most aggressive collapses in this ratio in over a decade. And when that happens, silver doesn't just rise, it slingshots. Think back to 1980. The ratio dropped like a rock, and silver exploded from under $6 to nearly $50 in months. In 2011, a similar crash in the ratio preceded another run. Silver surged from $9 to almost $50 again. In both cases, the gold to silver ratio was the trigger, and silver's move was nothing short of parabolic. Today, that same setup is unfolding again. The ratio recently breached critical support levels, and gold is already breaking out to new highs. Silver, however, it is still sitting well below its historic peak. This lag is not a sign of weakness, it's a coiled spring. When silver finally catches up, it tends to overcompensate. That's why seasoned metals investors are watching this ratio like hawks. It's one of the clearest indicators of an incoming price eruption. And what's causing this reversion? It's not just market forces, it's loss of confidence. Investors are realizing that while gold is a hedge, silver is the leverage. When the monetary system wobbles and fear takes over, silver becomes the high-octane play. And right now, all signs point to the ratio crashing even further, accelerating the move toward $50 and beyond. But the ratio is just one part of the story. Behind the scenes, something even more powerful is unfolding, something that involves the very institutions tasked with stabilizing global markets. The silver rush isn't just coming from retail, it's being fueled by the giants who once helped suppress it.
When the bear market ended at the end of 2015, the 4-year bear market or whatever, the mining stocks, they just took off like a bat out of hell. And some of the juniors, went up 5 to 10 times. It was crazy. But that rally only lasted 8 months. Yeah, January to August. And then the same thing in 2020. All the hot money flew into the mining stocks, and that rally petered out in August. That was a 6-month rally. But if you look at the start of the secular bull market, 2001, 2002, and you look at the end of 2008 to 2011, those two periods, what happened is that gold led for a while, and then silver started catching up to gold slowly, and then the larger cap mining stocks started to move, and then after that, and they lagged, the juniors, especially the riskiest ones, really started to pop. And that was, that cycle really kind of lasted until, I don't know, probably May 2006 or even into 2007 before, everything dove into 2008, late 2008. So my point here is that I think what we're seeing, and actually a lot of the largest cap stocks have done, if you look at Agnico Eagle, it's had incredible performance. But most of the sector, you're right, has lagged badly. And in my mind, and the fact that silver's lagging gold and gold is leading everything, to me, that tells me we've got a serious, high-quality move ahead of us that's going to last at least a couple years.
Behind closed doors, central banks are making a move that few are talking about. But it could change everything. While headlines fixate on gold, the real secret is silver. Across the globe, monetary authorities are quietly accumulating not just yellow metal, but the white one too. This isn't just diversification, it's preparation. These institutions understand what's coming. A monetary reset, a systemic shift, a breaking point in the global fiat system. And in that future, silver plays a much larger role than most realize. Historically, central banks have largely ignored silver, leaving it to private investors and industrial buyers. But not anymore. The same forces that drove central banks into gold, soaring debt, currency devaluation, and geopolitical instability, are now pushing them toward silver. And they're not broadcasting it. These are quiet purchases, off-market deals, strategic stockpiles. Because when the curtain drops on fiat currencies, the institutions holding real, tangible assets will be the ones calling the shots. And here's the kicker. Central banks aren't just buying metal. They're positioning themselves in silver-rich jurisdictions, quietly funding exploration, and even backing mining infrastructure. It's a long-game strategy. They're not trading, they're securing, because they understand that when confidence breaks, paper wealth evaporates. What remains is what you can touch, weigh, and store. This shift isn't just symbolic, it's catalytic. As these powerful institutions change their stance, it legitimizes silver in a way that reshapes investor psychology. Retail investors follow trends. Big money follows power. And when central banks start stockpiling silver, it signals one thing clearly. The clock is ticking on the old system, and silver isn't just a hedge anymore. It's a weapon for what comes next.
That's a great question. And as you know, the central banks keep the movement of physical gold as opaque as possible. They don't want anyone to know what's going on if they can help it. Part of it's probably an arbitrage, right? Short gold in London, so the spot price in London, and buy futures in New York. But the COMEX has never really been a delivery market, right? Gold and silver get delivered, but it almost never leaves the vaults, if it's even there to leave the vaults. I don't want to get too deep into the weeds here, but after chatting with a handful of people, I think, and again, I don't know, but I think what may be going on is, and obviously, as you know, especially Eastern Hemisphere buyers, a lot of big buyers of physical gold are now demanding repatriation rather than just buying it and leaving it in the London vault or buying it and leaving it in the COMEX vault. They want it out and they want it delivered to the homeland where they can watch it and be sure it's there. And I think that's been going on. There's more gold moving into the COMEX than has been moving out, but a lot more has been taken out of the COMEX than we've seen historically. So I think that's part of it. And I think what's going on is I think the bullion banks that operate the COMEX, JP Morgan, etc., if they got caught short on physical bars that they've hypothecated or they've leased out, and we know that goes on. That's elite gold leasing is an official thing. But so is hypothecation. JP Morgan got in hot water for hypothecating silver when MF Global blew up, if you remember that. And so I think what the bullion banks are on the COMEX are doing are covering their synthetic short in the bars in case all of a sudden, they get a tap on the shoulder from an Eastern Hemisphere sovereign or wealth fund who says, why don't you go ahead? We'll send a plane to get it. Why don't you go ahead and ship us our bars? And I think that's a big part of it that's going on. And then there's also the theory. Notice how Trump was beating his chest about auditing Fort Knox. And, that was a month ago. And then I haven't heard a peep about it for the last couple of weeks because someone behind the scenes told him to shut up. And I think there's an outside chance, not even an outside chance. I think there's a strong possibility that the Fed may be restocking the gold bars that are supposed to be sitting in the vaults that hold the Treasury's gold. So, and I find it interesting that he's willing to take a look into Fort Knox, which obviously is not because it hasn't happened. But why don't we also take a look and see what's going on in the Denver Mint, where also part of the Treasury gold is supposedly stored, and in the deep storage vaults at West Point.
We're now at the point where silver's industrial demand isn't just a factor. It's the engine behind one of the tightest supply-demand squeezes the market has ever seen. Every day, the world's technological revolution grows more dependent on silver. Solar panels, electric vehicles, AI server infrastructure, medical devices, 5G networks, none of these can function without it. Silver is no longer just a monetary metal. It's the irreplaceable backbone of modern industry. The numbers tell the story. Global demand for silver in industrial applications has hit record highs, while mining production has stagnated, or in some regions declined. For 4 straight years, the silver market has run a supply deficit. Warehouses are being drained. Recycling can't keep up. And new mine discoveries, they take years, sometimes decades to develop. We're consuming more silver than we can find, mine, and refine. And that's not a trend, it's a crisis. What makes this even more dangerous is that industrial demand is non-negotiable. If you're building solar panels, you need silver. If you're producing electric vehicles, you need silver. There are no substitutes at the same level of efficiency and conductivity. That means when industrial buyers can't get enough, they will bid the price higher, much higher. And unlike speculative investors, these buyers don't back off when the price spikes. They lock in supply at any cost, because production lines can't wait. This collision between exploding industrial demand and tightening physical supply is the powder keg beneath the silver market. And when you layer on top of that the flood of financial demand triggered by economic instability, you don't just get a rally, you get an eruption. The market's not just setting up for a squeeze, it's setting up for a historic revaluation. And the next layer of fuel, it's hiding in the most overlooked corner of the silver space.
You know, as you point out, it's a tough question. I mean, you can never know for sure because everything, again, you know, is kept opaque. All you can do is examine the footprints in the snow and see where they lead. And they always seem to lead to the same place, right? And I think we are transitioning into an era where price control is taken out of the hands of the Western central banks and the BIS. I mean, interestingly, there's a guy, Robert Lamborn. He's a consultant for GATA, and he studies the BIS financial statements and studies the institution itself more closely than anyone I'm aware of. And every month he reports on the level of gold swaps the BIS does, which the BIS has its own stock of 400-ounce bars. When there's liquidity issues on the LBMA, they do a swap that gives the bullion banks access to their 400-ounce bars so that they can deliver them to China or send them to a Swiss refinery where they're refined into kilo bars and shipped to India. Because, you know, if India and China and those other Eastern Hemisphere central banks want their gold, you have to give it to them. And if you say no, the whole world will know, and then the gig is really up, right? Well, the level of swaps at the end of 2024, they had, it was, I don't remember, something like, I forget the notional amount. Well, let's just say 500,000 units of swaps outstanding. And it's down to under 100 now. And I have a feeling that, and obviously that's in the face of what we know is a growing shortage of available bars that are deliverable into entities that want to take physical possession of them. I believe what's possibly happening is the BIS is looking at this and said, we got to pull back on our swaps because otherwise we might not get our gold bars. Again, I think the monetary system is transitioning into that type of reset. And, you know, I don't know what exactly it'll look like. Probably it'll look like the BRICS, how the BRICS are envisioning it. I don't know how hard the U.S. will fight it or if they'll just throw in the towel. I mean, they're going to fight. I think the U.S. will fight as hard as it can to maintain the dollar as the reserve currency because that's what gives the politicians their power, right? So I don't. To me, that's probably the biggest impediment to a whole entire global monetary system reset. And I also think that if it's done correctly, there has to be a system of accountability. So, you know, let's say China all of a sudden says, hey, you know what? Our currency's backed by gold now. You know, feel free to trade with us if your currency's backed by gold. And the U.S. says, oh, well, look, you know, our ledger shows 8,100 tons held by the Fed on behalf of the Treasury. So, yeah, we're backed by gold. And then what happens if China says, well, we're not going to take your currency unless we can see the gold?
While most investors focus on bullion, the real leverage in a silver bull market hides in the shadows, mining stocks. And right now, they're screaming undervaluation. Despite silver's recent moves, the majority of silver mining equities are still trading at depressed levels, priced for a world where silver is stuck in the $20. But here's the truth. When silver breaks out, these stocks don't just rise, they multiply. In every major silver bull cycle, mining stocks have been the stealth wealth play. In 2011, as silver surged from $9 to nearly $50, well-positioned silver miners delivered gains of 300%, 500%, even 1,000%. Why? Because these companies offer built-in leverage. Their costs remain relatively fixed, so when silver prices rise, their margins explode. A $5 move in silver can double a miner's profit. A $10 move can triple it. And in a world where silver is pushing $50 or beyond, that leverage becomes rocket fuel. And the smart money knows this. Private equity funds and institutional investors are already trickling into the space. They're not chasing hype. They're quietly accumulating positions in juniors and mid-tiers with high-grade deposits and low-cost production. These early moves rarely make headlines, but they're visible if you look closely at financing rounds and insider buying. This isn't dumb money chasing memes. This is calculated capital rotating into the most explosive part of the commodity cycle. But here's what makes this moment different. Silver miners aren't just undervalued. They're operating with falling energy costs. With oil prices easing and inflation stabilizing, their input costs are dropping just as silver begins its move. That means even fatter margins and higher earnings. The squeeze isn't just coming for silver, it's coming for the entire ecosystem around it. And for those who position early, the upside could be historic. But timing is everything. Because when the broader market wakes up to this setup, the window to buy these plays at bargain prices will slam shut. And the next wave? It could take everything we've discussed and push silver into a realm we've only seen in theory, until now.
There's a couple different components to transitioning to a gold-backed currency system, right? And part of it is just the logistics of the transition and backing the gold and accountability and all that stuff, the accountability. The other problem that's the white elephant in the room that needs to be addressed is the debt problem. And right now, the U.S. Treasury debt load is essentially existential. The Treasury market is going to blow up badly at some point. And if you watch the fund flows every month, foreigners for the most part are taking their money out of treasuries, and they're not. They, like with China, they used to take some out and then they buy some. Now I think I saw yesterday they're down to under 800 billion in treasury holdings. I mean, at their peak, I think they held as much as, I want to say, 1.5 trillion.
And just as an aside, 6 trillion in treasuries come due later this month or next month.
And
6 trillion.
And the sense out there talking about, oh, well, maybe we'll buy back treasuries to help control yield at the long end. Well, with what money? You're running a deficit, a spending deficit at an annualized rate of over $2 trillion. So what are you going to do? Issue a bunch of T-bills and buy, 10-year treasuries to try and get the long end of the curve lower? I mean, that's nuts. And it's the treasury debt is the worst, but corporate debt that's also, in bad shape. The amount of debt outstanding, especially when you look at commercial real estate and a lot of the debt that was issued by private equity buyouts, a lot of that debt sitting on bank balance sheets like at JP Morgan's, and it's a ticking time bomb. And then obviously consumer debt, consumer credit card debt outstanding is like at an all-time high. And people are using credit cards to make ends meet month to month. So, if you're going to have a true financial reset, you got to address the debt problem. And on top of that, you have to address the off-balance sheet derivatives problem, which takes the debt problem and magnifies it by...
The stage is set. All the pieces are in place. A collapsing paper market, a rush to physical silver, a crashing gold to silver ratio, central banks hoarding quietly, industrial demand outpacing supply, and miners poised for explosive gains. This isn't just a silver bull market. It's the beginning of a full-blown revaluation. For decades, silver has been suppressed, dismissed, overlooked. But now, that suppression is backfiring. The paper promises are unraveling, and the physical metal is being drained from the system with every passing day. And when the final short squeeze ignites, when the last ounce is demanded and cannot be delivered, $50 won't be the end. It will be the beginning. The silver market isn't just waking up, it's about to roar. And those who've been preparing for this moment, they won't just benefit, they'll be ahead of the curve in one of the most historic financial resets of our time. If you've made it this far, now's the time to hit that subscribe button so you don't miss what's coming next. This is not financial advice. Speak to a licensed professional before making any investment decisions.